Good morning. This is Lance, an equity analyst for ABCap, and welcome to Daily Trading Notes. U.S. markets rallied for the second straight session after White House advisor Peter Navarro cleared that the U.S.-China deal was not yet over. Meanwhile, investors' optimism on Apple remained as the stock reached a new record, pushing the Nasdaq to a new high as well. Dow Jones was up 131 points, Nasdaq rallied 75 points, while the S&P was up 13 points. For our market outlook, we expect the local index to consolidate this week with a range of 6,150 and 6,580. The PSEi has managed to build a strong base at 6,150 after breaking out from the major resistance a few weeks ago. Note, however, that the market may be fundamentally pricey, trading at 17 times PE based on 2020 estimates. We advise our clients to take advantage of huge dips on the market and to remain defensive until the 2Q results come out. In other news, the BSP is set to meet tomorrow, with rates likely to remain unchanged. BSP Governor Joknos said that he is in no rush to loosen rates further. So far, BSP has cut rates by as much as 125 basis points to 2.75%, releasing about 1.1 billion pesos into the system, or 5.7% of GDP. Inflation in May slowed further to a 6-month low of 2.1%, bringing the YTD inflation to 2.5%, still within the BSP range of 2 to 4%. BSP cited an upside risk, including a spike in crude oil prices as it inches up again. Last week, OPEC decided to cut their production until end July to support prices. We think that the Philippines is in a better position compared to other countries, given that the BSP has still room to cut benchmark rates further, while the reserve requirement ratio is still at double-digit levels. Domestic liquidity in March rose 13% to 13.1 trillion pesos, faster than the 11% growth recorded in February. Also in other news, the country's budget deficit surged to 202 billion pesos in May, bringing the year-to-date figure to 562 billion pesos, or equivalent to 35% of its full-year target of 1.612 trillion pesos budget this year, or 8.4% of GDP. Revenues fell 52% in May due to lower tax collections as a result of the ECQ and deferred tax deadlines. The budget deficit is expected to expand further as the government spends to address the impact of COVID-19. While revenues will continue to decline on the absence of business activity. And that's it for our market outlook. Have a good day.